We bring in Jessica Kriegel, Chief Strategy Officer, Culture Partners, to talk about what's going on. I saw not only that first-time claims were on the rise, but also that layoffs ticked higher as well. What say you about the jobs picture at this point?
Not looking good, and this is just the beginning. Labor expert John Fraze at Ankara predicts that this is going to get much worse in the next 2 months, and he is rarely wrong. What we're seeing is a lack of certainty in what things are going to cost and government policies and the economic situation generally. And so CEOs are trying to protect and preserve their capital. They're waiting and seeing. They're not hiring at the moment. It's not just the economic situation. It's also AI. And there are so many things to manage at the moment that they're just saying, let's pause. Let's wait. We're going to increase costs. We're going to increase revenue. We're going to decrease costs. And that means things are going to get more expensive and people are going to continue to lose their jobs.
And so at this point now, we think about what's been going on and the trends, the revisions that we just got in over the last 12 months. A whopping, 911,000 jobs, fewer jobs added. The prior year was 818,000. I think that was revised down. But some of these numbers really show the trend that we've seen over the last couple of years. And of late, even, the last few months have been dismal. Do you expect that to continue? What changes?
Yeah, I absolutely expect it to continue. I think right now what you're seeing is probably quite a few scapegoats that are being used to justify the redirection around the overhiring that's happened, right? We're seeing AI advancement, sure, but I work with pretty high-level clients. I don't think that any of them are capable of replacing 20% of their workforce because of AI right now. I think what they're doing is waiting and seeing, and they probably overhired in the last year, and they have been course correcting, and so layoffs are higher than ever. And so everyone is adjusting their strategies right now, and they're trying to adapt to the certain circumstances, which is the key to driving results. Is can you pivot? Can you adapt to the circumstances in order to drive results? And you're seeing this play out with the consumer already. I mean, you saw the jobs report last week. The biggest losses were in leisure, in hospitality, and retail. That means that households are pulling back. I mean, the canary in the coal mine is the $18 salad, which is now dead. People are not buying those salads anymore. So we expect this to continue for some time.
And so at this point now, the Fed is likely to cut rates. How do you feel should the Fed have already started cutting rates? Will the rate cuts help going forward? How many cuts do you expect?
Yeah, I do believe that the Feds are going to cut rates. I think most people agree with that. I think they probably waited too long, but in their defense, based on poor data, they were split last time, obviously. So there were some people saying, I don't know, now maybe the time. They have this dual mandate around inflation and around the job market, and we're in a stagflationary environment right now. So to be fair, it is a hard call to make. They're probably going to cut rates, though, next week.
Understood. I mean, when you think about the big picture in our economy, where do you think we stand? Are you worried about a recession and or stagflation?
I am worried about both. I mean, you've already seen there was an analysis done last week that multiple states are already in a recession. I mean, we are entering turbulent times. That's undoubtedly true. So how are we going to react when times get really tough? I mean, a side note, something I'm really interested in is things like DEI. Is DEI going to survive these economic hard times? People debate that. The folks who have said that DEI helps companies get results, they're going to have to put their money where their mouth is. And the people who don't, well, they're going to argue the opposite. SHRM, the Society for Human Resources Management, they're having an event in October where they're inviting Robbie Starbuck and Van Jones to debate this. I can't wait to see what the outcome of that debate is, because these are the kind of questions that CEOs are grappling with right now as times change.
And when you think about some of the policies going forward, would you like to see things change in certain ways? I mean, is there anything that can be done from Washington, sort of top down, for improvements? What would be some ideas?
Well, tariffs obviously is the answer there in terms of your opinion about what tariffs will do to the economy. I think there are various kinds of tariffs that have been implemented. There are the course correcting tariffs, which are just the adjustments to right size where we previously were to where we are now. And then there are these punitive tariffs that are done to debate policy in this trade war. I think that some of the tariffs coming down would probably help us from an economic perspective, and how much of those and where exactly can be debated. But that is one lever that Washington has that could probably help the economy.
Yeah, understood. And what am I leaving out? I mean, are you watching the U.S. dollar closely? Are you concerned about that coming down over the last 6 months? Though historically, a level of 97 is nowhere near the lows of where the dollar has been.
What I think is being left out right now is the incredible need to be able to adapt. We are now in an unknown territory. It is a mystery what's going to happen. There are so many influences. So what we need to do is have that muscle of adaptability. And historically, to pivot has been one time we're moving from A to B. The circumstances are A to B. But now what we need is the muscle of adaptability, which means we've got to get our workforces ready. We've got to get our products ready. We've got to communicate clearly with clarity, alignment, and accountability.
Yeah, understood. Let's get you back to the different groups. You mentioned hospitality and leisure. We talked about AI, and you sort of said AI is real, but also a scapegoat. So sector to sector, where do you think we'll see the biggest impacts negatively?
Professional services, I think that is probably one of the places where you're going to see the biggest impact immediately, both because of AI, but also because of that protect and preserve mentality that businesses are going to have. So the B2B sector, I think. You've already seen it happen with leisure, with hospitality. It's the American consumer saying, I'm going to hold right now. I want to protect and preserve my own capital and prepare for the future. And so we are watching where waste is not tolerable. Everyone is trying to cut the fat, and that goes for both CEOs, and it also goes for American households.
Yeah, understood. And Jessica, a final thought here. As we're approaching the opening bell, the 10-year bond yields, it's 4.03. A lot of conversations about U.S. debt or deficit. A final thought?
Final thought on that is, I mean, I have been watching my most interesting thing that I've been paying attention to on that is the Fed independence, perceived independence of the Fed. That's what I'm worried about, that this intervention, as it has been with the White House on the Fed decisions, on the Fed staff, if that intervention is perceived as taking away the independence of the Fed's decision making, then I think the yields are going to suffer, despite even if they do rate cuts. So that's something that I'm paying attention to, and I think that Powell's been handling it fairly well.
Jessica Kriegel, Chief Strategy Officer, Culture Partners, thank you very much.